Episode 25, here we go. Today's conversation is with Oleg Mikhalsky, a partner at Fulgur Ventures. Fulgur invests heavily in the Bitcoin and Lightning ecosystem, and so we started the conversation off discussing exactly why Fulgur is excited about Lightning and the ways in which Lightning can disrupt existing institutions, existing payment processors, but also create new markets and enable monetary transfers that were never before possible. We also discussed different business models in Lightning. We discussed how to get more founders in Lightning, valuations in the Lightning ecosystem. We even discussed the adoption of Lightning and whether it comes from a top-down approach like we see from El Salvador's Bitcoin law, or we see when Square turns on Lightning for Cash App users, or whether it comes from a bottom-up organic adoption like we see in Bitcoin Beach, or whether we see it in PlebNet. If you're enjoying this show, the best way you can let me know is by sending in sats that reflect the value you got out of it. That's a benchmark that I use to determine whether or not you guys found this episode useful. So when you get to the end, let me know. Send in a comment, send in a question if you have one, send in some sats if you got value out of it. If you didn't, don't send anything. If you got a lot of value, send in a lot. Pretty simple. It's a value for value model. And thank you for everyone who sent in sats for the last episode. Real quick, before we get into the episode, today's show is sponsored by Voltage. Voltage is the premier provider of Bitcoin and Lightning node infrastructure, and we will have more from Voltage later in the show in the lightning round. Oleg, thanks for coming on the show today. Really excited to chat with you about investing in Bitcoin and in Lightning companies. Maybe to start things off, why don't you give listeners a little background on your history in Bitcoin and why you decided to start Fulgur Ventures?
Yeah, well, Kevin, thanks for having me. I'm super excited, I'm very excited about the Bitcoin space as such. I don't have like a very long history in the space, but what I'm really amazed is how opportunity usually comes on the intersection of people that you know and you were able to connect with. So my story, in short, is I used to do angel investing between enterprise teams, and like my enterprise background is basically like software product management and business development. So after one of my stints, I became an investor in a company that shared like a working space with someone who was at the end of 2017 working for Lightning Labs as a remote software engineer. And on the other side of this picture, I had also someone who learned about Bitcoin a little bit earlier than I did. And he already had some projects in the Bitcoin space, and kind of like we knew each other. So I kind of like connected the dots, and I said, okay, hey, like I met this guy and he's kind of like super smart. He works for something called like Lightning Labs. And it was like in 2017, I think right before the bull run. And the response I got immediately, hey, like just focus on this. This is kind of like super important for Bitcoin. It's Bitcoin scaling. And I knew about Bitcoin already for a few years, but you never know enough, and it's a never-ending like learning story. So out of connecting this kind of like couple of opportunities together, what came out was we became angel investors in kind of like the first Lightning Network startup in 2018, and I spent most of my time with the startup, hanging around in conferences and trying to do some help with product development and strategy and networking, and that kind of like led me to the next phase when we thought, okay, like now we have like a little bit more connections, we know a little bit more about the space, so let's do the fund, and we started the fund in 2019, and I was just like looking at the calendar a couple of days ago, and it sounds like we just kind of like had a birthday. So the fund was actually started at the end of February in 2019. So we're like 3 years old. It's kind of like a small baby. It's a startup in the startup ecosystem. And that's pretty much it. And probably it's the beginning of like an even bigger learning cycle.
That's very cool. What was that first startup that you invested in 2018?
So interestingly enough, the mission was to build a web experience based on Lightning, and what the guys actually wanted to create and eventually created before realizing that they were a little bit like earlier in the market was a browser plugin that would allow payment with Lightning on a web page. And it was custodial at that time, so it kind of like assumed a lot of like regulatory work ahead, and there was not a lot of users, not a lot of applications with a browser interface. So it was a little bit ahead of time. It was called Bitloom.io, and they also did Zigzag.io, which was kind of like one of the first Bitcoin to Lightning on-off ramps. So you would kind of like rebalance channels using Zigzag and also move Bitcoin between on-chain and Lightning.
Nice. So you've been here since the beginning of Lightning, and you've kind of seen it develop. How do you think about now looking back on the last 4 years? Has it grown as fast as you expected it would back in 2018? Has it grown faster, slower? What's your interpretation of that?
I think what is really interesting is the cyclicality of Bitcoin space and going through the ups and downs and volatility, because cyclicality and volatility and they kind of like accelerate learning. What I think is important is the pace of understanding, like what the technology actually does, what are the capabilities, which things work, which things don't work. And typically on this kind of like ups and downs and spikes, when the ecosystem kind of like hits some like limits, the more learning actually occurs. So I think we are in the beginning of like the next learning cycle after the previous year bull run. And there is definitely a lot of momentum in the Lightning ecosystem, which we are seeing that wasn't there before. So both on the venture capital side and on the startup founder side and traction. So we know that like Twitter is doing work with Lightning. Cash App introduced support for Lightning. There are some quite substantial fundraisers happening recently, like OpenNode announced a significant fundraise. And the metrics, such as in the recent research by Arcane, and also we at Fulgur did research a couple of times to kind of like show how the metrics progress on the Lightning Network. So there is definitely like way more momentum, but what is important, there is way more understanding of what the technology is actually capable of and how it can be applied to build applications in different domains. So I think like the main difference between maybe like this year and a couple of years before is that then we kind of like had a hypothesis based on kind of like holistic understanding of like what innovation in payment means and what micropayments could mean in the future. But now we really have like tangible examples such as Lightning Network applications in the gaming industry, for example, or in content industry. So kind of like on your podcast, for example, on Fountain.fm. So we finally get to the stage where we have hypothesis turned into products, and these products are getting their metrics. And we're seeing that some of these metrics are very convincing, both about proving like the value proposition of the technology stack, and also proving specific business models in specific domains, such as like podcasting or gaming, for example, to name just a few.
And now, do you think the adoption in Lightning and some of the learnings that companies are going through right now is also tied to that cyclicality of the price of Bitcoin that you mentioned earlier, like that things kind of come and go in waves? Do you think Lightning adoption ties into that as well, and it to some degree is dependent on adoption in Bitcoin and the price of Bitcoin? Or do you think it kind of is its own ecosystem and it's kind of insulated from the price of Bitcoin. Because I think some of the apps in Lightning don't necessarily depend on the price of Bitcoin. Like they work just as well if Bitcoin is up or if Bitcoin is down. And whereas I guess there's some other crypto apps or DeFi protocols and things like that that depend on a big rush of capital flowing in and depend on liquidity and excitement and energy. So I'm curious to know, do you think that Lightning specifically has this cyclicality as well as the broader crypto industry, or do you think it's more insulated?
Yeah, there's kind of like partially an answer to the question and what you just said. So let me try to maybe like expand from there. So the cycles create the top of the cycle creates like abundance of capital that gets redistributed back into startups, and it also creates additional excitement. So that kind of like drives innovation activity and startup activity in the space. So this is probably the like two aspects where the kind of like cycles overlap. But other than that, if we think of Lightning as payment rails, which can eventually be used even to like maybe transfer an asset which would be decoupled from Bitcoin as an asset, for example, but would run over Lightning, like maybe a stable coin. So that would make Lightning kind of like more so independent and developing in its like own cycle. Also because Bitcoin is more like an asset, and with Lightning you can build applications outside of trading and asset accumulation space. So it's payment rails, and it can also drive innovation in other spaces that are kind of like complementary to payments. So it's a bit of both, but we're probably gonna see more activity on Lightning regardless of the Bitcoin cyclicality, but there is definitely an overlap.
What do you think about when you consider like your focus on Lightning and how that's different from maybe other investors who are not specifically focused on Lightning and maybe are investing in crypto or other chains or maybe Bitcoin more broadly? What do you think you've discovered here, or what are you excited about that other people just haven't quite realized yet? Like, what is it that there's obviously like this divide, right, between Lightning investors and broader crypto investors? Where is that? Like, what are some of those key points of differentiation? What are some of the key maybe beliefs or ideas that you have that give you conviction to invest in Lightning companies, where other people may say, no, I'm going to stick to crypto. I'm not going to go into Lightning?
Yeah, I guess like there is an easier part of the question is how Fulgur like positions itself, and our thesis is kind of like built on several things. So we believe in Bitcoin as a monetary system and Lightning as payment rails and as enabling technology for innovation in fintech. And we also want to be a highly value-added investor to the startups and with whom we partner. So by understanding the space and by investing across the ecosystem, we believe we can create more value and bring more value to the startups by finding some synergies maybe between different projects and also by kind of like really go into the weeds of how things work and like actively engaging in like brainstorming about business models, even sometimes about product implementation. And the third thing is like we're like just technically curious people, and my background before like blockchain was actually distributed cloud storage, which is kind of like a similar concept that is quite popular in the open source space in like massive storage systems. So we tend to understand like the details, and I think it's important to help us be more helpful to founders and also to make better decisions. So by being really focused and doing what we're excited about and what we believe in, kind of like really helps us contribute with more energy to and more like sense, more meaning to startups. And yeah, on the other hand, there are definitely like generalist funds that invest across like multiple domains, and I think founders can always look for having like the best of the two worlds. And we are also, as an investor, we welcome kind of like sharing deal flow with other investors. First of all, in the Bitcoin space, such as with, for example, Stillmark and Alisky Lynch, who's been on your podcast recently, and with others as well. And creating synergy between investors, but also investors from outside of the Bitcoin space. They could bring also value in domains where they are experts. Like, for example, in something like Fountain FM. Investors from like media space or with connections to like or experience like from Spotify, Anchor FM, whatever. They could be also like highly value-added investors, maybe for like later stages when the project is scaling. So it's at the end of the day, it's super important to have a right combination of investors that add value in the most strategic directions where startup will need to accrue value and scale and de-risk. So it's all kind of like a team play, and we are all in the same boat when once founders and investors partner with each other. So it's just important to kind of to view things like broadly and be very thoughtful about which investors add most value to the startup at every stage. It's kind of like a little bit of a science, probably.
Yeah, I really like that value add perspective. That's something that I've been thinking about in my head a little while for the last little while. Is how important is it for a founder? If I'm a founder and I'm looking for capital, how much does it matter that the investors that I'm taking on are also going to help build and help get connections and help actually create and help iterate on the product that I'm building versus just handing me capital and letting me go run and do my thing. What has that changed over time? Because it seems like capital is not a constraint for a lot of startups right now. Like there's just so much money floating around. And my gut would say that it probably is true that value-add investors are going to get more deals now when everyone has money and everyone's willing to invest. But is that something that you've seen to be true over time? Is it true today? Is it changing over time?
Yeah, that's a great topic to dive deeper a little bit. Thank you for bringing this up. So definitely, in the past days, there has been the VC space has been kind of like hyperactive, and we definitely see excess of capital in certain sectors of blockchain space. I wouldn't say like Bitcoin and Lightning is a capital-rich space as of yet, but with like I was really excited to see Elizabeth Stark and Lightning Labs featured in the recent webinar by The Information, like one of the VC-focused media outlets. That definitely elevates Lightning on kind of like on the level of like broader venture capital investors and contributes to Lightning awareness. So even though there's probably like not yet an excess of venture capital in the Bitcoin and Lightning space, however, like the answer to your question is kind of like simple. So if you have capital that has no added value and just like sits passively, you're basically like missing out on the added value that you could have had if you've attracted capital with added value. And in the worst case, if you have capital with like negative value, like I don't know, like people who would like bug you, like, yeah, you gotta like issue a token, you need a token, and we need a token. So that's just like gonna distract from being on a mission to build something great based on technology that has like fundamental value proposition. I think what more investors are going to realize with time is that Lightning has, and it's proven over time, like a perfect technology product value proposition match. It's instant, low cost, counterparty risk free settlement, which removes several or helps to address several of the major bottlenecks in any fintech payment system. So, I think Jeff Bezos from Amazon said that, like, people are never, like, gonna refuse to buy, like, cheaper things. So there are fundamental things, like, there's always going to be payments. And in payments, there are always overheads. And by making payments more efficient, a lot of value can be created. And the Lightning and Bitcoin is exactly the right software stack and the right ecosystem to build it, because they have the technology that's in a very simple and efficient way addresses the inefficiencies of like payment stack, and also creates potential for other applications like Bitcoin native finance, or like the Internet of Money, payments and transactions for digital content, for digital entertainment. So we have fundamentals clearly in Bitcoin and Lightning stack, and it's just a matter of time that more participants in the space understand and discover these fundamentals, and these fundamentals manifest in traction of the startups building in the space.
So this is a perfect segue for my next question. Which do you think will be more, in which bucket do you think will Lightning be more impactful? In disrupting current intermediaries and reducing payment costs and improving speed, and kind of like, this is the kind of bucket that I would put a product like Strike in, where it is eliminating some of the fees associated with payments today, and it's actively going after payment processors and existing businesses today. The other bucket, I would say, is new applications that are not even possible without Lightning. So a lot of the micro tasks, a lot of the content streaming payments, like Stacker News and Fountain are great examples of things that just don't have a parallel before Lightning. So which side do you think Lightning is going to be more impactful in? Disrupting current intermediaries or creating new markets?
Yeah, this is an excellent question, and we don't know the future, so we can only operate like on hypotheses and assumptions. Most of my time I'm traveling to conferences and meeting people. I'm super amazed how many interesting people with interesting ideas and interesting views are there in these events. And in one event, I met someone who has been working in Google Payments for quite and in payment. It was actually not a Bitcoin conference; it was a payments conference. And there were just like people who had decades of experience in payments. And I answered this, and I asked this question. And I got a little bit of an answer that it's not so easy to disrupt something like fintech and payments and the financial system, because there is a lot of regulatory modes, there is a lot of inertia. And in general, finance is a very conservative category. and there are regulations, and it's just like not so easy. It's like if we kind of like romanticize things a little bit, like disruption is a great great challenge, and it brings a lot of excitement. But payment and financial stack is not so easy to disrupt. However, as like hopefully we're seeing like with every day, the value of Bitcoin and Lightning kind of like they manifest like themselves based on different like external events or experiences that we experience in our life. But creating new products and new markets, or augmenting existing products and existing markets, and gradually improving them may be another way where we can see traction while we're still kind of like working on creating like a major disruption. For a great example is actually again like we're on a podcast, and a great example is also like Fountain.fm. So it's just a totally new way of engaging with audience between podcasters and listeners, which has clear monetary incentives, and in a measurable way can actually change monetization model for content in podcasts, which is a very fast growing industry. So this is a clear case for this kind of tangential application of Lightning and Bitcoin to an existing growing industry to create an even more interesting industry where value is distributed. And I know like Adam Curry was also on one of your podcasts, so you probably like already covered a lot of that. So yeah, this is actually a great example of kind of convergence between an existing industry and Bitcoin and Lightning. But there could potentially be totally like Lightning focused and Bitcoin focused experiences, such as, for example, LN markets, trading with options on Lightning. So that's like totally a new market that has not existed before, and we will see more examples like this. So I think, as always, like we're gonna see a little bit of everything. Disruption is a great and exciting challenge. Disrupting the financial stack is a bit more challenging than disrupting like a traditional industry. But creating tangential experiences and tangential products such as games with Lightning, podcasts, and etc., or creating like totally new products like native Bitcoin financial products like Bitcoin collateralized loans, trading with financial instruments that are completely like built on Bitcoin stack. I think we're going to see a lot of innovation there as well, and that may also be like an interesting area to watch.
Are there any particular Lightning applications or use cases that you think are waiting to be disrupted but have not been disrupted yet? Like, any holes in the market right now, when you look at startups and you see some targeting gaming, you see some targeting podcasting, you see all these different verticals that people are going after, what are people not going after today? Is there anything interesting that you think someone's got to get that and no one is doing it right now?
Yeah, that's... let me think a little bit. So one thing that I'm really excited about is overlap between Bitcoin, Lightning, and energy payments. The first time I heard about it, I think it was from Nayuta, a company in Japan that is building on Bitcoin and Lightning. And they were probably like the first one ever to mention this to me, that Lightning can be used for settlement of energy payments. I'm not an expert in energy payments, but I kind of like, I believe that I understand a little bit what kind of like role in general Bitcoin can play in like renewable energy, building like sustainable new energy projects, and also energy settlement. It's a big problem in itself because it's all kind of like siloed between multiple like energy producers, energy distributors, and instant settlement for instantly consumed energy this could be something really, really, really massive. Energy is like a basic need. Every home runs on energy. I don't know, we cannot speak like of some sort of like consumer mining, maybe, I don't know. And also, like, I'm not really a mining expert. My expertise in building software applications. But having a kind of like a home device that would be able to somehow like monetize some resources that this device actually has and pay for energy bills. So kind of like making like a sustainable home using a Bitcoin and Lightning device. That would be something really cool. Maybe Umbro will like eventually get to building something like this, or maybe something like that. So yeah, energy is one thing, and the other thing is, of course, digital entertainment and content monetization. So I think there is a lot of opportunity to democratize and make this industry way more like accessible, because like imagine, and also like in the altcoin space, there is this kind of like metaverse paradigm that is like another like very unknown thing that kind of like still unfolds. But when people ask me about metaverse, what I understand is like the the commerce in digital space is almost like infinite. There is no limit to what kind of like economic transactions can be handled in a digital space when you're not constrained with delivery of physical goods, and you are not constrained with cross-border payments and foreign exchange and things like that. So some kind of like digital content platform that allows creators from and listeners from like and viewers from all over the world interact with each other with less friction and less overheads than current systems and current platforms do. That could be also a very interesting project to see coming.
Yeah, well, on the topic of metaverse, I'm curious to know what you think that metaverse is. Like you mentioned, like it's kind of this fluid concept that no one really understands completely today. We don't really know what that means. What is your vision of the metaverse? Do you think it's one that exists outside of Bitcoin, on another smart contract platform? Is it one that just is like seamlessly embedded into our daily lives so we don't even know what it's built on? How do you kind of think about how the metaverse and Web3 might evolve? Like, what do they look like 5-10 years from now?
Yeah, I think it's a dangerous question, because metaverse is typically promoted by other blockchains and other ecosystems. So we can probably have like a wave of like Bitcoin maximalist negativity against like metaverse as such. But the thing is, like, we don't know what metaverse is. It's not an established category. It's just like an assumption of how things can look like in the future. But again, what I'm trying to find in ideas and startups is fundamentals. So we've discussed how Bitcoin and Lightning clearly have fundamentals that support the value proposition that Bitcoin and Lightning stack delivers. So there could be also fundamentals in human behavior and in generation shifts that would support some paradigm of metaverse coming to fruition. What I mean specifically is the younger generations compared to older generations are like very much digitally native, and they don't so much rely on physical artifacts. Like my generation or like my parents' generation used to have like physical collectibles, like even posters of rock stars, or tickets to events, or like physical toys. And there would be economies around this. Like when I was at school, we were basically having physical NFTs. We folded cars from paper, and we traded this like paper cars with using like bubble gum rep as kind of like money. So that was all like physical, but it existed. So now everything is digitized, and younger generations they're way more exposed to like these digital experiences. So it's not difficult to imagine that something like this is going to exist in the digital space. But I think the dangers are to rush into something without really understanding what's going to look like, and especially to invest a lot of money in risky projects that kind of bet on unproven assumptions. And also to claim that somebody is going to build something that is going to do something that we kind of really don't know how it's going to work. I think that's one of the biggest problems and dangers for me in all these metaverse conversations. Is a lot of these conversations are not really focused on how actually things are going to work there in terms of technology and the exact user experience. But yeah, there was or is a big hype around it. But I think it's kind of like a dangerous territory, and we should be very thoughtful and very mindful in filtering all this noise associated to this cool metaverse discussions.
Right. So yeah, I mean, it definitely is an unproven space, and I can see how that makes it difficult to make an investing decision when you don't really know what that addressable market could look like, or even what consumers want, because it's still unclear exactly how that'll unfold. Now, when you're thinking about making investing decisions today, and you're looking at businesses, are there any particular business models in Lightning that you know are proven and you can kind of confidently back?
Yeah, well, first, like getting back slightly to the previous question, I was probably like the worst person to ask about metaverse, because I don't have kind of like psychological background and background in consumer marketing. So my pretty much my entire background is in software as a service, business to business, and infrastructure software. And that's kind of like, that has been like my bread and butter for almost a couple of decades. And with Lightning and Bitcoin, we are also like, infrastructure is essential. And application infrastructure, such as the different wallets and different types of nodes, and nodes in the cloud, and self-sovereign nodes. So these are like all the necessary building blocks, as well as developer tools to build applications. So these are the building blocks without which the picks and shovels of the Bitcoin and Lightning like monetary system and payment rails. So these are like the essential projects without which it's just hard to imagine how to efficiently like build more and more technology and products on Bitcoin and Lightning, and how to reach more adoption. And then the connection between user experience and the technology, and making like user experience really smooth, and paving the way from custodial to non-custodial user experience. This is like a very important strategic topic that's probably going to unfold over the coming years. So this is also something that we're paying like very close attention to. In terms of business models, so yeah, like infrastructure is and like business to business, these are kind of like known business models that work in general in the internet and in software. And obviously Lightning is going to have new business models around micropayments, also around Bitcoin native financial products that we are yet to see. It's just important to thoughtfully think about again how technology supports how technology delivers value, and how to distribute this value between the user and the provider of a solution. So I think we're gonna see existing business models and we're going to see new business models as well. What is interesting about Bitcoin and Lightning specifically, is that unlike any other software infrastructure, it has a monetary aspect. It has like a security, DevOps aspect, and it also has a monetary aspect because it needs liquidity to run. So we're going to see business models around liquidity management or providing data that enables decisions around liquidity management. And potentially we could see some analogs of like banking relationships, correspondent relationships between banks, and basically moving liquidity and reallocating liquidity between Lightning Network nodes in a way that leads to creating like a more efficient routing ecosystem and a more like robust network. So this is probably an area that will require business models that have not existed before.
And for those business models that haven't existed before, when you're getting approached by startups, how do you try and predict how much value a company could create and capture for investors? What's that thought process like for you?
It's a good question. Again, we don't know the future, so all predictions can be based only on assumptions. And it seems like the world has entered a period of extreme volatility. So a lot of assumptions can be easily broken because of either like a black swan events or like regulatory changes. And also it kind of like to add to the complexity, Bitcoin has its cyclicality as well. And Lightning is kind of like still, there are pieces that are still like under development and are still to be figured out. So in general, there is probably still a lot of uncertainty as to how exact business models and products will look like. So we believe that for a startup, it's really important to be cognizant like of everything, and to be agile and rational about how the founders view the world and their mission, and how they take into account the inputs that are coming along the way. So being agile and thoughtful and operating in a volatile environment to find out the business model, I think is going to be like an important quality for founders, because we just like the future is a bit more volatile than it used to be before, and we are in an innovative like uncharted territory that has like regulatory, geopolitical aspect, monetary aspect. So yeah. Again, we just we need to know the limits of what we know, and we need to know the right questions to ask to try and find out what we don't know.
Right, that makes sense. Now, I want to talk specifically about valuations in Lightning, because something I've noticed looking at early stage Lightning companies is a lot of companies raising their first round are raising it at a valuation below 10 million, sometimes, $3 to $6 million. Whereas on other smart contract platforms, you could see valuations 10 times higher or even more for a similar stage company. Do you think that Lightning companies are appropriately valued today? Does that distinction between Lightning companies and other smart contract companies give you a margin of error when you don't know what the future could hold, that you have like a different valuation that you're getting in at? How do you think about valuing Lightning companies today in this uncertain environment?
Yeah, it's probably like a question for like an entire podcast, because it has a lot in it.
Yeah.
But let me start by maybe like commenting on the higher valuation in like altcoin blockchain space and like in token space. So the economics of this valuation works in a very simple way. because there are also tokens allocated to investors with a lockup period. Investors typically can sell part or all of their tokens, but they usually sell part. So they kind of like get back their liquidity as soon as or they can get back their liquidity as soon as the lockup period expires. So they're kind of like already net positive, or at least like break even in a very early stage of their collaboration with a startup because of this token aspect. I don't want to go like a lot deeper into what it means to actually for investors to sell tokens and to startups and who is buying them and kind of like what are the like social and moral implications of that. But because of this early exit opportunity, there is like an incentive for investors to get into this overvalued or like highly valued startups because they just can like quickly get like a break even or get like a little bit of an upside in their startup by retaining at the same time like a portion of token and a portion of allocations for some potential like future growth. And again, like I'm not an investor in that space, so my read may be incorrect actually. Please take it with a grain of salt. Also, all technology is kind of like, it has like a fashion aspect to it, and marketing, PR, and hype, they kind of like create misallocations of capital. And to add to that, in general, there is like a lot of misallocation of capital in the VC space in general, even outside of the like high tech space and blockchain space, because of the sheer abundance of capital. Is just again, like to transition maybe to like a more practical lightning related part of the answer to the question. Valuation is actually a product of supply and demand in a way, and we've already touched this before, that Bitcoin and Lightning space are still kind of like not over invested, which is like reasonably good because it does not create distortions, and it does not create unhealthy ecosystems and unhealthy hypes. When we are talking to founders, what we are trying to reach an agreement about, that valuation is not it's a means to an end. It's not the end game. It's not the end game, not in the one round, not in the second round, not like in the subsequent rounds. It's just a means to an end, and of course it has kind of like trading aspect, like maybe a little bit of a like mercenary aspect to it, because and also ego aspect, because there are like comparatives, there are also data on valuations outside of this space, but it's only a means to an end. And it is important so in short, and if there is got to be like a takeaway from today's podcast, I think relationships are valuable, but valuations are just kind of a product or like a way to execute on a relationship. But first, relationship is what creates value. And valuation is just like a consequence of that. And it's just important to find the right investors and to have a meaningful conversation with them and come to something that is reasonable. So valuations, they have reason, and there needs to be a progression of valuations over the rounds, so that the startup can continue raising in a reasonable way with other external investors, and everybody needs to be kind of like happy and comfortable along the way, including both investors and founders, which is mostly dependent on relationship rather than on the exact number. Exact number is just like one of the check boxes to kind of like get things going and get from one stage to the other. So we value relationships, and we are striving for like building solid relationships with founders. And the valuation discussion, sometimes it's a longer one, sometimes it's a shorter one. but it just it's a way to start working together, but it's not the end game, and it's not like even like an end goal.
That's a really good perspective. I like that. In your view, do you think that there are enough founders building on Lightning for you to kind of come in and fund the right ones and build those relationships? Or if not, how do we kind of get more founders excited about building on Lightning?
We would love to see more founders to start building on Lightning, and maybe even more founders coming from different ecosystems with different experiences. Like, for example, like from podcasting ecosystem, like Adam Curry or someone else, or from the gaming industry. And we're already seeing founders from the gaming industry who are very excited to start building on Bitcoin and Lightning. And we are working with a few founders like this, because founders from a specific industry, they bring expertise as to how this exact industry actually works and how to be successful in that specific industry. Again, that brings us to the question of like Fountain.fm and kind of congenial improvement of an industry by solving one of the problems, but not like disrupting the entire industry. Which is like a very lengthy process and requires a lot of effort. So we more than welcome founders with experience in diverse industries who want to build on Bitcoin and Lightning something that solves problems of their specific industries. I think this is an important quality for founders to know what kind of problems exist in specific industries. And this is maybe where like the future waves of founders would be coming from. But right now we are mostly like we're still building a lot of infrastructure. And for infrastructure, it's critically important to be a kind of like Bitcoin, a founder who is born into Bitcoin and Lightning, who really understands all the technology and is like hands-on with all the technology stack. Because it's just kind of like not possible otherwise. It's unlikely to succeed on a Bitcoin and Lightning startup without really understanding how to build on this technology and without having real experience building on Bitcoin and Lightning. So we welcome both types of founders, and we're definitely expecting to see more founders in this space, especially as Bitcoin and Lightning narrative gets elevated to like the corporate level of like Twitters and Cash Apps and generalist venture capitalists. So and also like to certain industries such as gaming. Like super excited about the traction that Lightning has in the gaming space. And we also need a healthy mix of business-oriented founders and technical-oriented founders, because of a lot of uncertainty on the business side, like with business models and everything, and also because kind of like what I believe is like how human brain works. At least that's kind of like how my brain works. I'm really good at like focusing on one thing. And so I don't know, like maybe there are exceptional founders who kind of like grasp both like the business domain and the technical domain. But eventually the more company progresses in its lifespan, the span of attention kind of like has to shift. Either you really focus on the business side or you focus on the technical side. But there still needs to be like shared responsibility, and also shared responsibility brings system check of balances and like a healthy collaboration in which ideas become like more mature and more like polished with time. So a healthy combination of business focused and technically focused founders is definitely something that can bring a lot of value to the ecosystem in the stages to come.
Right. If you were speaking to a founder who was maybe an expert in another field, considering building that technology on Lightning or on Bitcoin, but also weighing the potential to build it on another cryptocurrency platform or entirely outside of crypto. What would that pitch be? How do you convince the founder that Lightning is the technology on which they should be building this business rather than another cryptocurrency or sticking with fiat?
Kevin, I think this is like a very individual pitch because, it just kind of like depends on where the person is on the spectrum of kind of all these aspects. We talked about it in briefly, like Bitcoin. What is exciting about Bitcoin is it has like it's a multidisciplinary phenomenon. It has technology, it has a monetary system, has regulation, has geopolitics, and it has innovation and disruption. So I don't think there is like a silver bullet. But the promise of Bitcoin being a monetary system, like a decentralized, distributed, all-inclusive monetary system, that is very easy for a person, or will be, or is going to become easier for a regular person to onboard, to transact at low cost without counterparty risk. I think this is like really the big promise that no other technology offers in this space. It's and this is we already know it, and it has been like solidified over like 10 years of Bitcoin existence, that Bitcoin does fulfill this promise. While other technologies, there is a lot of to me, because I'm not an expert in those other technologies. So actually, to answer your question, but also to make it more difficult, I would have to learn a little bit more about what this founder is up to and what other technologies he's considering to kind of like really rationally position Bitcoin. But in some of the technology stacks that I have met, it's very clear. It's not really clear to understand how the marketing claim is actually achieved with technology means. And I think it's like a dangerous gap. And maybe it's actually a gap in my understanding, but that's why we don't invest in other ecosystems. But if someone would be building, to nail this down, I would really ask the person to explain how he is going to achieve what he is trying to build on his specific blockchain or technology. And I bet in most cases the person will not be able to really provide like an in-depth technical answer how that thing is actually going to work there to deliver the promise of what they're trying to build. I think this is kind of like the vector of attack.
Okay, so it really depends on whether or not their application needs this technology and can benefit from it. Okay,
right. We don't need to build everything on Bitcoin. We need to build things that are relevant.
Yeah, 100%. I want to shift the conversation a little bit to the growth of the Lightning Network, and specifically, I want to talk about some of the latest catalysts for growth that we've seen in the last year, and how you view growth going forward. So, two catalysts, El Salvador and Square, or Cash App, both onboarded millions of people to the Lightning Network, right? We have El Salvador with now 4 million Chivo wallet users. Square, or Cash App, has an estimated 70 million users, many of whom can now move their Bitcoin across the Lightning Network if they choose to. And both of these kind of came as top-down moves. That Bitcoin's adoption in the last 12 months has primarily come from top-down initiatives, right? Those big two. Before that, you could argue that Bitcoin's adoption was primarily coming from bottom-up, organic, word-of-mouth adoption. It was hobbyists playing around. There still is that today, but it seems like it's been a bit of a shift between whether or not growth is coming from bottom up organic adoption or whether it's coming from top down decisions made by companies or governments. Moving forward, do you think that Bitcoin and Lightning adoption is going to primarily come from these top down decisions, or will we continue to see more like bottom up organic growth?
Yeah, I understand that. Like, you're really a master of tough questions. So that's another tough one. But luckily, we spent some time on doing our research about what is kind of like called hyper-Bitcoinization. Hyper-Bitcoinization is also something that, it kind of like has a definition, but I think it's still like evolving. But okay, let's say it's mass adoption of Bitcoin. The focus of our research was exactly to try and understand what players and what factors can move the needle, both in the top-down and bottom-up direction of Bitcoin adoption. And what we're seeing in reality is actually there is movement in both directions. So there is now Cash App and Twitter. And there is also El Salvador, but El Salvador kind of like started from the Bitcoin Beach project, which was almost like bottom up. There is also with a kind of like enterprise or top-down approach, there is some risk, or at least like some sentiment about a risk of centralization. Like, for example, is it like a custodial solution? How is it like controlled? How is it? To what degree is it centralized? And what we've seen so far that centralized entity can act faster and can move a needle faster. But what we want to have in the end, we probably want to have like a truly decentralized, open, all-inclusive system where anybody can participate or like enter the system and withdraw from the system based on his own choice. This direction of adoption is also happening. But as it's happening organically, it just happens as it happens, unless there are some kind of like black swan events or some kind of like really, remember we talked about volatility. So volatility kind of creates a learning experience because volatility creates pain. And volatility is not only about Bitcoin price fluctuation. It's also about like fiat price, which is kind of like the reverse of Bitcoin price. So like a country with a volatile fiat currency can discover Bitcoin value proposition after a significant drawdown in the exchange rate. Volatility also creates, it just kind of like creates kind of like hard experience that accelerate learning. So as we go through the Bitcoin cycles, the bottom-up approach is also going to accelerate, hopefully, because the spikes and drawdowns they accelerate learning. They accelerate learning, and learning is kind of like one of the ways to promote the bottom-up adoption. So I think at the end, it's probably going to be like a combination of both of them. And both of them has their kind of like pros and cons. The top-down approach has a pro that it just like happens. And it can happen faster. As you said, El Salvador, Cash App, but it also has an aspect of centralization. So we don't yet know how this aspect of centralization will evolve over time in the ecosystem and how it can impact the ecosystem. But the other side of the spectrum is also evolving. So there is more education with more events. Unfortunately, these are typically kind of like painful events, especially because money and monetary system is very conservative. People are not used to constantly seeking for a new solution in money. Money is like one of the the things that people don't want to risk, and most people don't want to risk, and they don't want to innovate with unless they are like hedge fund people or like traders. I think we're getting advances in both directions, and it's how it converges all together. It's eventually like what is like very exciting, and what will shape up like the big picture. So both approaches are working.
Now, maybe in the context of El Salvador, because they're kind of this great use case we have. They've enacted this Bitcoin law 6 months ago now. So when we think about the distinction between bottom up, so like the Bitcoin Beach approach in El Salvador that kind of like kickstarted the movement, and the top down approach where Bukele kind of said, we're going to make this a standard across the country. Do you think that El Salvador is trending in the right direction? Do you think like this combination where you have the bottom up approach that is going to be slow and it's going to kind of like have to come from the community in El Salvador versus the top down approach that is going to be coming from the government, but maybe it doesn't permeate people's consciousness. People don't quite entirely understand Bitcoin and don't fully appreciate it if it comes from someone else telling them what to do. And of course, as you mentioned, the centralization risk of a top-down approach. How do you assess the situation in El Salvador today? Is it leaning too far to the top-down approach? Is it kind of, do you see real bottom-up adoption happening outside of Bitcoin Beach? Curious to know your thoughts there.
So yeah, if there is one question that's going to be like really hard to answer for me, that this is probably like this one, and because I missed the conference, unfortunately I didn't go to the conference, so I don't have on the ground experience, and I'm still collecting data points about what is actually going on, and there were a lot of data points suggesting movements in both directions. So something is working, something is not working, and I think I'm probably not really the best person equipped to answer this question. But again, there are fundamentals. There are fundamentals such as a lot of El Salvador GDP is formed from remittances, and in remittances there is cost incurred by enterprise remittance companies such as Western Union and others, to name a few. So remittances using the Lightning Network makes a lot of sense. So there are economic incentives for people to adopt it because it brings more inclusivity and increases opportunity to participate in the global market. Also, like with like tourists, so it kind of like becomes like if it becomes like a tourist attraction, there is people going there. It may be easier for some people to just transact using the Lightning wallet than to deal with like foreign currency exchange and stuff like that, and payment rails. And then there is also like the Volcano aspect and the El Salvador bond aspect. So there's like really a lot of innovation going on there, which I think creates a huge momentum. I think like me personally, I need a bit more time to digest this, but the potential is huge. The potential is huge, and we partner with companies who are working in this area. So we are kind of like, we are actively involved in what's being built. I think we're gonna see like more interesting results this year, because like the potential is huge. When you kind of like put all the picture together, including the bonds, including volcano mining, including like remittances, tourism, and participation in the global economy. So it's kind of like super exciting.
Do you think we'll see another country do the same thing this year, trying to harness their energy, trying to promote tourism, trying to save on remittances with Bitcoin and with the Lightning Network?
Again, like I tend to believe in fundamentals, and I think fundamentals are there. as we just discussed in El Salvador example. But I'm not like a geopolitical or a macro expert, so I cannot really make like an educated guess as of yet. But I'm super excited to see how it is going, and I'm pretty sure that something interesting is going to happen.
Fair enough. I like that. Okay, let's finish this off with a couple predictions. I want to hear your predictions for 2025 on the number of nodes and the public capacity of the Lightning Network. I think right now public capacity it's pushing 3,500 Bitcoin, and the number of nodes with an active channel is about 20,000, just over 20,000. What are those numbers in 2025 if you had to make a guess?
Oh, well, I have to make educated guesses. So let me start by saying that there is continuous search for like killer apps that could drive adoption of Lightning en masse, and not only for remittances cases kind of like being figured out, but something like games, for example, or some financial app. The next year maybe is going to be a year where there is more research and more products that are financial products on Bitcoin and Lightning. And with that being said, as finance and the financial domain is quite conservative, I think with financial products, we are probably going to see steady progress, but not like a really like flipping the switch and everybody is like transacting with millions of satoshis every second. On the other hand, with digital content and games, theoretically there could be a game that just like flies, and everybody sees a need to get his Lightning wallet out of pocket and start using Lightning. So some kind of like consumer application that maybe in the entertainment or in communication or in media consumption space could kind of like become like the killer app. And there are also like other ideas of killer apps, such as like messengers with that do not like require like a phone or an email to sign up. That would basically like require, for example, keys like Bitcoin or Lightning keys as a proof of identity. And there is work in progress in that direction as well. So as much as you'd love to get an answer from me, I think it's I'm just like, in all the ways, I'm probably, there is much more downside giving an answer from a game theoretical standpoint than there is upside. There is a lot of risk and too little reward to
Fair enough. That's a very thoughtful answer. I appreciate that.
Really. But I think we should be watching for financial products, because they bring more sustainability and like more fundamental activity. And we should be watching for consumer apps that can have some kind of like flip the switch aspect, like a lot of people suddenly on board. But then like it does not necessarily, to get back to your question for a second, that does not necessarily manifest in like millions of nodes being fired up, because there is work being done how to kind of like compact accounts on nodes by making it kind of like semi-custodial. And there is also like infrastructure capacity questions that need to be addressed. And again, like we are not in the space to create like a big splash, and we are in this space to create sustainable innovation that will deliver value over decades. So we don't need to rush without reason.
And I also think that some of the growth on Lightning, like as you were mentioning, it may not show up in the number of nodes. It may not show up in the capacity. I think already we're starting to see payments are flying through the network faster and faster just out of efficiency improvements versus it's not necessarily because more money's in the network or more nodes are in the network. We're just getting better at routing money through the network. Nodes are learning, nodes are improving, and so there's definitely going to be many different ways that growth could present itself. And I agree. I think to caution listeners, maybe those two metrics are not necessarily going to be the single, like rules that you should kind of rely on for whether or not the Lightning Network is growing or not. There's a lot of other stuff happening behind the scenes.
Exactly.
One I can specifically call out is like podcasting.
I would be super curious to watch source code development, like code-based development, developers, tools for developers, and obviously like venture capital as well. So. I'm definitely positive we're going to see more and more developers building on Lightning as more infrastructure and more tools become available and more education in the space. So, I think these are kind of like also important metrics, such as, developers, startups, source code, and monitor activity, as you said, like in general.
For sure.
Transaction volumes, and volumes that numbers of transactions and volumes, monetary volumes of transactions.
Mm-hmm. Well, I'm really excited to see how this all develops. Before we go, I want to hear where can people go to find out more about you and Fulgur Ventures?
Well, the best way to find Fulgur Ventures and me is on Twitter, because it tends to have like the least clutter as compared to like Telegram, for example. But our website is fulgur.ventures, and our email is contact@fulgur.ventures. And I'm always excited to learn what other people are doing and to have a chance to speak with someone who is excited about what they're building. More than welcome. Happy to talk to anyone who's interested to discuss something about Lightning.
Awesome. Thanks so much for taking the time today. I learned a ton, and I hope we can do this again sometime soon.
Yeah, absolutely, Kevin. Thank you so much. There was so sharp questions, and I'm sorry if we didn't kind of like answer every and all of them in every detail that you might have expected. But
no,
there are
great.
Physical boundaries as to how much we know about this new space, and I want to be mindful about what we know and what we don't know yet.
Yeah, this was great. No, we'll keep an eye on it, and I'm excited to watch Lightning grow.
Thank you so much.
Thanks. Welcome to the Lightning Round presented by Voltage. Voltage is the industry-leading provider of Bitcoin and Lightning node infrastructure. In fact, many of your favorite apps and services already use Voltage to scale their business quickly and easily without maintenance. Voltage also offers an inbound liquidity product called Flow, which helps you as a node operator get inbound liquidity easily. Overall, Voltage is creating the industry standard suite of non-custodial products, helping brands, engineers, and startups scale. To learn more about Voltage, visit voltage.cloud. Lightning round, let's go. In the last 7 days, you guys have sent in 62,920 sats, 16 different supporters, 24 messages. Some of these are from the previous episode, but some of them are from the last 3 or 4 days. Real quick, the top 5 leaderboard for sat senders is still Peter on top with 24,794 sats. Chad Farrow's in second with 16,234. Mary Oscar's third with 5,586. Y is in fourth with 3,038. And Niall is in fifth with 1,666. Now, let's get into some comments. First one comes from an anonymous user. That's why they did not get into the top 5 listed users. But they sent in 2,052 sats, and the message says, "Hi from BitBoom." So I guess BitBoom belongs in the top 5. Thanks for the inspiration. Fantastic episode. I wish I had more sats for you. Thank you, BitBoom, for sending in the sats and for the kind words. We had next up Jeffrey, who says, Another great show. Programmable money is such an unlock, and sent in 1,470 sats. Thank you, Jeffrey. I agree. Every single day now, I am just like, my mind is spinning. After the Adam Curry episode, I see value for value, and I see this like programmability in Bitcoin everywhere. It's amazing. Next up, we had Y, who says, never going to be anything more? That's not what I'm seeing. Interesting take from way deeper in the community in response to the 15-minute mark in episode 24 with Chris Stewart. That's a great episode if you want to do like a technical deep dive on DLCs and oracles. I found that really interesting, but one thing that it taught me was that I know way too little about the technical side of the Bitcoin Lightning Network. The next comment actually comes in from an anonymous user who says, I heard people use multi-sig wallets for bets, and each signature is linked to a different oracle. And this, it further exacerbated my realization that I don't know enough about the technical side. So I'd love to get on a guest who's super technical and understands Lightning infrastructure and some of the back end stuff that you don't see in apps like Fountain or apps like Stacker News. Some of the stuff that's abstracted away, I would love to understand more of that. So if anyone listening to this has a good idea for a guest, I'm thinking maybe someone building on some of the implementations, maybe some of the team at Lightning Labs. If there's anyone you know, fire me a message, send in some sats, send in a comment. I'm always looking for new guests, and I think that'd be a really cool episode. Those were all the questions in the last 2 or 3 days since the last episode. But I can't wait to see what you guys send in this week. I think this was a really cool episode. Kind of like a similar style to the Elise episode where we got into investing. That's kind of the bread and butter stuff that I get really excited about. So I'd love to hear all your guys' thoughts and let me know whether or not you got value out of this episode. See you in a few days.